today I'm going to show you why Bitcoin is actually undervalued at $45,000 USD and why it's not too late to buy Bitcoin. All right. So let's jump into the technical analysis for Bitcoin. We're looking at the weekly chart. Okay. The weekly chart, meaning that every single one of these candles or these bars represents 1 week of trading volume. Okay. So it's a very sort of zoomed out time frame. So, the higher we zoom out on the time frames, the more respect the technical indicators are going to get from the market, the more influence they're going to have, and the more impact they're going to have on the price action. Okay, so that's why when we zoom out on the weekly, it's a very suitable time frame for me and my holding period and how I kind of look at the asset for how long I want to hold it. So it also gives us really good, reliable indicators that we can trust to hold as support and resistance in the trading activity. Okay, so looking at weekly, the one indicator I really love is what's called the pi phi indicator. Essentially, it just takes pi, which is 113, okay, and it attaches to that a few sort of levels, a pi times 2, and it also has the Fibonacci levels here, and then the extension levels here in red. So what I wanted to mention today, if you look back, at historic cycles for Bitcoin, bull runs, bear runs, etc., this indicator has been pretty steady. We've never broken below the 355 week moving average, never. Okay, not even in 2015 when we had this bear market. So we like to look left at that structure because it's going to leave clues for the future. So we rallied up to 20K. We hit some of these fib extension levels. So if I double click on this indicator, you'll see the parameters that I have, right? The settings. So there's the orange, 113. Remember, that's 113 weeks. Okay. There's the 355. That's the solid black line that you'll see on the screen. And then all the other thin colored lines are just Fibonacci levels, which you should be familiar with at this point. We've got the 23.6, the 38.2, 50, 61.8, etc. Then these are the extension levels. Okay, so just to get that out of the way, we've got some of the 161, the 261, then some of the really big sort of maxed out extension levels for when Bitcoin has its parabolic runs. So there's the 8, the 13, and the 21. So what I want to point out is in this last bear market, guys, we hit 20K and we pulled all the way back. This was a 2-year-long, grueling, painful bear market, 20K to 3K. What I want to point out is, see the thin black line? That's where we bottomed out. Okay, even once we rallied back up and hit the resistance on the extension level and pulled back for another year, we got big support on that thin black line, which is essentially pi times 2. Okay, so it's taking the thick black line and multiplying by 2, and we're saying, hey, the market actually sees that as fair value. Okay, in this last bear market, that was actually a very good buying opportunity when we came into that level, right? 6K, and then back here it was about 4K. So you would have had an average cost of about 5K in this last bear market cycle if you just bought that basically that average price. Now in this, if we come a little further up into time and we get closer to the last bear market, right, when we came up into 60K and then we sold off into 16K, where did that support come in? Well, look at where it came in. It actually broke through the thin black line, which is the pi times 2. It kind of supported there for a couple of weeks, then broke through it, and then really dropped hard into some of the lower extension levels like we saw back here. Okay, like we saw back here into these pink lines, which is essentially the pi plus the extension levels that I showed you, the 127 and the 141. So that got gobbled up. We saw a lot of price action there over the summer of 2021 and 2022. And then we came down into the 355. So that's the 355 week moving average. And you can see actually here on TradingView, guys, you can come to tradingview.com. The link is in the description. And you can find me. It goes by Lorenz_capital. And you can see my publications in real time, which is essentially predictions for the price action. So you can see back here in December of 2022, about a year ago, I posted this publication, and which is really cool is you can kind of go back and see what you're expecting to happen at that time when Bitcoin was at 17,000, right? And I was calling for the bottom. So if you press play, you can kind of see if you were right or wrong. And essentially, I mean, that was pretty damn close to spotting the bottom, because after that we just had nothing but up, right, in price action, 150% return. So far so good on this latest prediction for Bitcoin. But what I wanted to point out is, if you look at where the price is today, we're at 43,000. Now if you look at this thin black line that's coming through, that's coming in at 39,000. So if you think about that as the fair value in past bear markets, right? In the past, that bear market, that thin black line was coming around 5K. So if you bought that, that was fair value. It felt expensive, right? Because the price came all the way down to 3K. So 5K felt a little bit more expensive. But you can see that that was still fair value. If you bought that, you were golden for that next bull market. So that's why when we look at the price of Bitcoin in this last bear market, and it came all the way down to the 355 and rallied back up, well, guess what? Now we're actually closer to fair value, and I do think that this 39,000 level is going to be a very good long-term price as we gear up for the next sort of price discovery, hopefully parabolic move. Okay, so I'm watching this level very carefully. I do expect the price of Bitcoin to start to rally as we get into 24 and we get closer to the halving, and then of course past the halving, with the supply of Bitcoin really starting to diminish, and really they're the biggest suppliers of Bitcoin to the market is the miners. So a year and a bit usually after the halving, the miners supply to the market really starts to shrivel up. So what I'm looking for the upside, guys, is I'm going to be looking for these extension levels again, similar to like what we have seen in the past, where we get into the extension levels and then back to the average. So currently where these extension levels are sitting is about 100K, which makes sense on that first extension level right there. The next one is about 150K. That will be a very, very cautionary time for Bitcoin, and likely to see a heavy amount of profit taking if we do get there. And then way higher up, probably out of reach for this next bull run, is around the 250K level, but that will be the max I think that this will go. Probably sometime in mid 2025 is the prediction currently, but we'll have to see how this goes. And that's all I really wanted to cover for today's video. I just wanted to show you guys this long-term chart for Bitcoin. Zoom out. Remember, it's very technically traded Bitcoin. It relies heavily on averages and Fibonacci levels and some of the other stuff that I like to talk about on this channel. So if you haven't already, please hit the thumbs up button if you enjoy the content. Subscribe, come on over to the website, come on over to TradingView, and feel free to reach out to me. I'd love to see the comments, and stick around, because I think this channel is going to help out a lot with market timing and entry and exit points, and trying to get a slight edge over this market. All right, so thanks for tuning in, and I'll see you in the next one.